Hello guys, my name is Bayo. I'd like to introduce you to a simple type or style of trading or a simple strategy. It's not really that simple, but it doesn't require indicators or all those stuff rather that you need to use to litter all of your charts. So in this simple way, it is price action trading strategy, and I want to make it as fast as possible. I don't like to say stories of definition of this and that. If you're a newbie here, just go online, look out for what price action trading is all about, and you will know. But then, in a layman's term, price action trading strategy is a type of strategy that involves you trading action of prices in the market, historical action of prices. This action of prices are formed patterns with the opening and the closing and the highs and the lows of all these prices. They form regular patterns, shapes, or let me say setups that you see on your charts based on history, and then repeatedly that's how they've been doing. And today I just want to use one of the indices to explain some stuff to you that you can see. I'm putting my template on no indicator. Of course, even before now, it is no indicator. So today I was able to trade Crash 500 a lot because that's where I saw good setup on Crash 500 and then 1000, then 1000. But then because I like the movement, the the momentum on 500, whether boom or crash, than on 1000. 1000, especially from 1000, moves so fast. So if it moves against you, you're in trouble. You understand? Especially if your capital is not, big enough. So if you are a small account holder, like very small account, like $50, you should, trade softly on boom 1000 or even crash 1000, especially boom 1000. So today I'm going to be talking about crash 500. I'm going to be introducing you to some familiar price action setups that would interest you a lot. You understand? I saw two. First of all, on my D1, I was able to spot a bullish engulfing pattern. This is purely candlestick, kind of thing. And quickly, I want to make it as fast as possible. This is the bullish engulfing pattern. As you can see. Let me zoom in. This is a bullish engulfing pattern. I don't know if you are familiar with it, but this is it. So from there, I knew that the next candle after it is expected to be bullish, or sometimes it can be indecision. And so this is an indecision candlestick. Whatever the name is, that's good for you to know it. Then after this indecision, I was still hell bent on the fact that this market is going to be bullish, and that's because I knew that from previous support and resistances that I've spotted in the market, and then all of that, I can see that there are places market has not retested from the aggressive drop. Please mind you, the general trend on higher time frame and even lower time frame is still bearish. Okay, it is a downtrend. You can see the aggressive drop, then a consolidation, then another aggressive drop, then a consolidation, then another drop, then a consolidation or retracement, as the case may be, and then another very aggressive drop. Okay, so from here down here, market has not retested these broken areas of um market retested this place, it broke through, retested this place, broke down here, it has not tested this place a second time, if need be, but then broke this place, retested this place, now broke this place, but on this time frame had not retested. Let's check H4. Even on H4, you can see all these spaces. There are a lot of inefficiencies there. If you're not familiar with the term inefficiencies, order block, and all of that, I think you need to brush up like that, especially for the beginners on this. It's not something really very difficult. So I'm not trying to bamboozle you with big terms. Okay, they are just simple things you need to know. But then you can see market are not retested this space. Okay, you can decide to want to put your support here, but I'd prefer to put my support around here. Okay, this is a minor one, but this is a major one because when it got here, it bounced off aggressively. But when it got here, it attempted bouncing up, but then came like this. Okay, so what price action pattern? Price formed inverse head and shoulders, and from the inverse head and shoulders, If you are familiar with inverse head and shoulders, let me see if I can just give you something interesting on inverse head and shoulders. While my page is loading, on a picture on inverse head and shoulders, I like to quickly, do some labeling. This is my left shoulder. This is my head. This is my right shoulder. Alright, so guys, this is inverted and shoulders. So there is always a neckline, just like your neck, the place where your neck meets your right and left shoulder as a human being. When price breaks out, it must retest it. It is good or better or even best that it retests it. Sometimes the shoulders might be the same size and sometimes they might not be the same size. But the neckline should not be so slanty that it will not be so nice or neat. I like the neat ones. But however, it can be something like this. It can be a little slanty like this. But and it can also be a little slanty like this, but not so way up or way down. You guys understand? So look at this. So the measured objective is price gets to the neckline from the right shoulder, breaks above it, retests it. Then the distance of movement, the distance it moves from the edge, the tip of the head to the neckline must be the same distance from the neckline upwards. That's for inverse head and shoulder. So what then do? We look for the neckline. So here is my neckline. This is the tip of the head. So you can use measuring tool. Fibonacci is my best measuring tool. That guy is so actually so nice. But you can use your arrow. So from here, neckline here, you can see price just seemed to stall at that place. So what I did was I took a trade, I layered some trade from here, then took profit all along. So for some people, they would think, okay, when price gets here, it's going to drop, they keep catching the spike down, not knowing that price will still bounce off. Some people will still be catching some spike down from around here, but not knowing that price is going to. So immediately I saw price get rejected here, it came back, I bought again. I kept buying above this neckline because it doesn't look like price is going to break this neckline. This is a strong support zone for now on this time frame. So price kept bouncing off this support, and now price completed my measured objective. It took all of today. Today's 27th. Okay, so from yesterday and all of today, the price to do this movement. But one thing is good, that you are sure of what you are taking, not because markets will play exactly like that. Do you understand? Because it's a two-way thing. It's either head or tail. That is, it's either it goes your way or against you. But that you are sure that this risk you are taking with your proper money and risk management is good enough. You can't imagine buying something around here and your SL is around here, and you are buying around here and your SL is around here. For what kind of take profit? Do you understand what I'm saying? So after taking this, the next pattern I saw was a flag pattern. I saw both together, so I knew this is a buy for me. When I mean buy, I mean buy for inverse head and shoulders, and also buy for what's it called, this flag pattern. So as you can see, let me make it a little neater. I like it better like this, following the way price does it. This is still neat, right? So as you guys can see, this is a very good setup. So my flag is going to be from, my pole is going to be from here to here. There are two ways to measure this. It's either your flag is from, your pole is from there to there. This same exact measurement is the same measurement that goes from here to this place. So I'm expecting price to stall around 70660. So guys, if you are trying to sell crash 500, it's not good for now to sell it. It's good you stay with the buyers. Do you understand? So that's it. So I'm expecting price to move from here up here. Sometimes some people make another one to be like this, that the price moves not just only from here. The measured objective for some people is from this point, breakout point. Okay, from this breakout point, sorry, people say from this breakout point up here. So some people are expecting price to move way up here. Well, whichever way, I prefer my take profit at this point so that I stay straight. Alright, so I'm expecting price to stall around this place if you measure yours. Sometimes I use Fibonacci tool too. I just measure from, sorry, I measure from level 0 to 100, because 100 to 200 is the same thing. When I pick my Fibonacci tool, I put it on this place 0 and check out where level 100 is. So it's also almost the same thing. And if it is from the breakout point, as from here to here, you can see level 100 tallies with that place. So we're looking for aggressive moves. Some moves you can see I'm beginning to pick trades already from that point. Okay, even if we are waiting for a retest, we are likely to have a retest maybe around here, and maybe price goes way up here. You guys understand now? So usually, but as you can see, it's forming a support already above this place. Whatever happens, price might decide to stay above 6920 for now. Price might decide to stay above 6920 for now. Okay, and with this position I can feel safe because I have the risk. If price pulls back down even to this level, I have the risk sufficient because my take profit is still around here. You guys get my take profit is still around there, and that's quite nice. If I measure from here to here, just say price also back down here, it's 7495, and I measure from here to here 108. That's around maybe 1 to 1.25 or 1 to 1 point whatever. But usually price would not get back down here. Price would stall around here. You get, so this is 58 to 1 something, that's like 1 to 2. All right, so based on that, that's what I want you guys to understand. So I'm not I've traded the inverted and shoulders, now I'm trading flag. So imagine you see two setups, sorry, two patterns in this. And for boom 1000, you can see I have on daily time frame, price is moving within this channel. Let me make it better. Price is trying to move within this channel. This is so neat. This tip, this tip, this tip. Price has touched that tip again. This is my resistance support zone. It's quite neat. Okay, so these are all the bounce offs. Okay, I can remember I saw this particular bounce off around 16th October. Yeah, that was mid October. And then I was trying to tell someone that price might likely be bouncing off here because I can see that the bottom of the channel is really going to bounce off, because I saw this pin bar also, and I saw this other rejection candlestick, and then all of a sudden the buy was very aggressive and like that. And now what I'm expecting is a pullback down to this level or even this level. Do you guys understand? But first it will claim this level. But before it claims that level, I can't see anything reversal yet, because this is still a bullish, strong bullish candlestick, and this is also a strong bearish candlestick, but I'm not seeing anything reversal yet. You can see this is a good reversal setup. This one's to a good reversal setup for candlesticks. But then one thing that will trigger a sell-off tomorrow is if price decides to close below 13,500. You can see all these candlesticks that brought the sell-off. This candlestick closed. Let's check. This candlestick closed below 13,500, and all these other ones, then they sold off. So if today's candlestick closes below, we are on 13,495 now. If it closes below 13,500, that's a good signal that this price is going to drop. Now you imagine you are selling this at this point, you have sold at 13,500 already, and then your SL is around 13,700. Do you understand? And your take profit is not even way down, it's around this place. is around 1300. 1300 to 13500 as take profit and 13500 to 13700 as SL. So 200 versus 500, that is ratio 1 to 2.5. That is very good risk reward ratio. And with good money management, even if you have an account size of even $50, if you open 0.2 position on this, if you open 0.2 position on this, you are likely going to have good, something. Let's imagine you have picked your trade already. Your 0.2 can give you $100, and if it moves against you, 200 of 0.2, that's 40. You're likely just going to burn your capital. Do you understand? So, but then you would enjoy how taking this kind of trade turns out. Now you look at it on H4. You can see that on H4, it is also forming a familiar pattern. We call it inverse W formation or M formation. This it looks like an harmonic pattern. So now the measured objective of this is it is supposed to sell here, or we are supposed to sell here first to this neckline. Then when it breaks this neckline and we test it, the next take profit is here. So your two take profits are this neckline 13.3 something and 1300. So guys, if you are planning on buying from 1000, please don't buy from 1000 yet. You should be selling from 1000 or wait for a breakout above 13650 thereabout. A breakout above here and a retest. That's going to be a very big buy setup if it should, or if price keeps closing above 13500, like all these places. If price keeps closing above 13500, we're expecting price to rally back up here, because it means price is finding a good support around these areas and can go way back up and test all these places again. But if price keeps closing below 13 or closes below 13500 today, price is expected to go way up. Do you guys understand? So that's it. So I'm just going to be waiting for this particular trade to materialize, and then from there I'll tell you what the outcome is in my next video or in on the live video session. I'm going to be taking live video session maybe tomorrow or before the week runs out, and then we'll be doing some trading together. I'll tell you what I've spotted, and then we'll enter them together, and then just ride these setups together. Thank you very much. See you next video.